Hello, I'm Darryl Montgomery, organizer of the New York Investing Meetup. The following is part of a presentation given at one of our recent meetings. It's one of 5 videos in the series. Now, let's hear Bob Rubin discuss how to profit from the falling dollar.
All right, now we're talking about foreign stocks. And like we were saying before, you can earn here both from a price rise and from the currency exchange as well. Now here I'm just showing a few very useful websites where you can find these. There's a lot of ETFs that have either a regional or a national focus. There's ETFs for China, for Hong Kong, for Singapore, for France, for Great Britain, etc., etc. There's a long list of these. You can pick countries or you can pick regions of the world that you're interested in, and there are ETFs for most of them. And I'm giving you the website here where you'll see a long list of those. There are also a lot of closed-end funds and index funds that look at various global indexes. You can get them at ETF Connect. The next one is, I found over the years, a marvelous site to use, ADR.com. ADR is simply an American Depository Receipt. It is the certificate that's used to trade some foreign stock in the United States. And there's a lot of these that are very well known, but there's a lot more that aren't. If you go to this website, ADR.com, they've got pretty much all the ADRs that there are, and you can search for them by region, by country, and by industry. And not for all of the ADRs, but for some of the bigger ones, they'll give you, financial figures as well. But it shows all of the ADRs, even the very small and obscure ones. So you can really get fabulous ADR information out of that site. There are also some U.S. brokers that will let you trade foreign stock directly. E-Trade does that now for 6 particular major countries, although you have got to establish a special account with them just to do that. You can't do it with your regular account. But there are other brokers that will let you do that. Now, some of the major exchanges are starting to merge. Prominent example is the New York Stock Exchange recently merged with Euronext. So that should facilitate that kind of trading as well. I got a little table here just to make the point that there are some U.S. stocks that get a lot of their revenues from overseas, which gives you some degree of hedging against the dollar, assuming, of course, that these corporations are very good in managing their foreign exchange. And most of these big companies, in fact, do have risk management departments that are specifically concerned with foreign exchange trading, because they earn a lot of their revenue in foreign currencies. And exactly when and how they bring it back to US dollars is a big operating issue for them. But you'll see the top line is the S&P 500, large cap stocks. Overall, the S&P 500 stocks get about 44% of their revenue from overseas. And you can see, some of the big names that are involved. And it's not in any particular industry. You can pick what you're interested in. Intel, Coke, Exxon, McDonald's, 3M, DuPont, Procter & Gamble, etc. These are all companies that are getting more than 50% of their revenues overseas. And there's quite a few more besides these. This was just an illustrative list. You're most likely to find that in large cap stocks, but that's a strategy as well. And that's why, actually, if you look at recent prices that have been extremely volatile, you'll find that a lot of the best price performance has been among companies like these, because they have been relatively insulated from the weakness of the dollar.
To find out more about the New York Investing Meetup and to see the notes referred to in the video, please go to our website.